YIELDMAX ETFs, specifically the SDTY or S&P 500 ADTE Option Income ETF. It's a fascinating area, and we have an expert here to unpack it for us. Let's dive right in. What immediately strikes you about this ETF?
The name itself hints at its core strategy, generating income from short-term options on the S&P 500. The 0DTE is key. It signifies options expiring the same day, which introduces a unique risk-reward profile.
Exactly. That daily expiration adds a layer of volatility, doesn't it? What are the potential benefits and drawbacks of this approach?
The potential benefit is higher income generation compared to traditional ETFs. However, the daily expiration means significantly higher risk. It's a high-octane strategy.
So it's a trade-off between higher potential returns and increased risk, right? Let's explore the mechanics of how this ETF generates income.
SDTY primarily generates income through selling covered call options on the S&P 500 index. This means they collect premiums from investors willing to buy the right, but not the obligation to buy the underlying index at a specific price.
So they're essentially betting that the S&P 500 won't rise above a certain level by the end of the day?
Precisely. If the index stays below that level, they keep the premium. If it rises above, they're obligated to sell the index at the strike price, potentially limiting upside potential, but still profiting from the premium.
Given the daily expiration, how does one assess the risk involved in investing in SDTY?
The risk is amplified by the short-term nature of the options. Market fluctuations can significantly impact the ETF's value within a single day. Investors need a high risk tolerance and a deep understanding of options trading.
I see. What kind of investor would be best suited for this type of ETF?
It's not for the faint of heart. It's best suited for sophisticated investors with a high risk tolerance, a strong understanding of options trading, and a short-term investment horizon. It's not a buy and hold strategy.
How does SDTY compare to other income-generating ETFs that don't utilize 0DTE options?
Traditional income ETFs often focus on dividend-paying stocks or longer-term options strategies. These generally offer lower risk but also lower potential returns compared to SDTY. It's a spectrum of risk and reward.
Right, so it's a matter of choosing the right tool for the right investment goals and risk profile.
It's also important to note the regulatory landscape surrounding 0DTE options. Regulations can change, impacting the ETF's strategy and profitability.
That's a crucial right. Regulatory changes could significantly alter the risk-reward profile. How do different market conditions affect the performance of SDTY?
In volatile markets, the premiums collected from selling options can be higher, potentially offsetting losses from the underlying index. However, in extremely volatile markets, the risk of significant losses is also amplified. Conversely, in stable markets, premium income might be lower.
Should SDTY be considered a core holding in a diversified portfolio or more of a satellite position?
Given its high risk, it's definitely more suitable as a satellite position within a well-diversified portfolio. It shouldn't constitute a significant portion of an investor's holdings.
What due diligence should investors conduct before investing in SDTY?
Thorough research is essential. Investors should understand the risks involved, the ETF strategy, and its historical performance. Consulting with a financial advisor is highly recommended.
Are there any specific tax implications investors should be aware of?
Yes, the tax implications of options trading can be complex. Investors should consult with a tax professional to understand the potential tax consequences of investing in SDTY.
What's your outlook on the future of 0DTE options and ETFs like SDTY?
The popularity of 0DTE options is growing, but it's a relatively new area. The long-term viability and performance of such ETFs remain to be seen. Continued monitoring and adaptation to market conditions will be crucial.
What advice would you give to investors interested in learning more about 0DTE options and similar strategies?
Start with education. Understand the basics of options trading before considering investing in such high-risk instruments. There are many resources available, including books, courses, and online tutorials.
What are some key risk management strategies for investors in SDTY?
Diversification is key. Don't put all your eggs in one basket. Also, consider position sizing. Don't invest more than you can afford to lose. Regular monitoring of your investments is also crucial.
So it's clear that SDTY offers a unique investment opportunity, but it's not without significant risk. The high potential returns come with a high potential for losses.
Precisely. It's crucial for investors to understand the risks involved and to only invest what they can afford to lose. Thorough due diligence and a strong understanding of options trading are essential.
That was a great discussion. Thank you for your insights.